Hawaiian Bank.
You picked a wonderful night to turn in, my friends, because it's time for financial solutions, and of course, it is tax time. And here from First Hawaiian Bank is my good friend Cecilia Malimban with some helpful tax tips. Cecilia, half a day, and thank you for coming by.
Half a day, thank you.
All right, well, everybody out there is going to be taking notes tonight. So, primarily, what services does First Hawaiian Bank provide for its customers as far as taxes?
Yes, First Hawaiian Bank has different IRAs available to our customers. By taking advantage of Roth IRAs, rollover IRAs, or traditional IRAs, our customers can have their money grow either tax-deferred or tax-free. It is always best for you to consult with your tax advisor to determine the best type of IRA for you. Depending on the type of IRA, you may be able to lower your tax bill now or in the future, as well as build your nest egg for your retirement.
Okay, well, give me an example of how I might be able to lower my tax bill. That's very, very attractive to me. So how might I be able to go about and do that?
Sure. By taking advantage of traditional IRAs, you may be able to lower your taxable income by deducting all or a portion of your contribution and therefore lower the tax you owe. If you would owe taxes on April 15th, setting up a traditional IRA now may lessen the amount you need to pay, or you may even end up with a refund instead of having to make a payment. The money you save in a traditional IRA will also grow faster since earnings are not taxed until you start taking distributions.
And this is all completely legitimate, and
yes.
You would think that more people would know about this because, you know, the benefits seem like obvious. There's very, very little risk.
Well, in terms of where you put the money, that would be another topic for discussion because the IRAs can go into bank accounts or investment accounts. But the basic types of IRAs would be Roth, traditional, or rollover.
Now, that concerns me as a customer of yours because one of the things I'm worried about is what happens if tax rates go up in the future and how might that affect, you know, my future tax bills.
Then if you're worried about tax rates being higher for you in the future, then the Roth IRA may be right for you. Unlike the traditional IRA, Roth IRAs will not lower your taxable income now. However, when you reach age 59 and a half or after 5 years, whichever is later, the Roth IRA becomes completely tax-free. All withdrawals, principal, and interest will not be taxed.
Okay, well, that's good information. So I guess last question is, you know, we talked about the Roth IRAs. I would think, not being a financial expert, that the Roth IRAs are the more popular and more well-known ones. Talk about rollover IRAs and why would that kind of IRA be useful?
Well, if you have a retirement plan from your previous employer and would like to move it elsewhere, then the rollover IRA is the way to go. This would also apply to other IRAs you may have with other financial institutions that you're looking to move to a different financial institution. By rolling over, the money will continue to grow tax deferred. This is especially important for those below age 59 and a half, since withdrawals are subject to an additional 10% penalty in addition to the normal income tax.
Okay, well, Cecilia, that's wonderful information. And for more, you can make sure to contact Cecilia and her colleagues at fhb.com, and please do so. Stay tuned. We will be back with more show when we return.